Hi everyone, welcome to the Market Talk series of Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. Property companies are expected to be major beneficiaries of falling interest rates. This is evidenced in the strong performance of property stocks lately. But we still have an oversupply in offices for lease and residential condominiums for sale, which will take years to resolve. Have we already seen the worst? To help us answer this question, we have with us today Joey Bondoc, Director for Research at Colliers. Hey, thank you, Joey, for joining us today.
Of course, April. Thank you. Thank you for inviting me.
Okay. So let me start out with the question that I asked. We have an oversupply in offices and residential properties.
That's right.
So do you think we've seen the worst?
Well, if you look at it right now for the office sector, April, we're still at about 20%, almost 20% vacancy in the office sector. And admittedly, in Metro Manila, it will take a few more years for this vacant space to be fully absorbed by the market. Of course, there are reasons behind this increase in vacancy. Number one, you have the POGO exodus. The POGOs have left the Philippines, and that really left a huge void in the office segment. Imagine at the height of the POGO sector in Metro Manila, they occupied 1.3 million square meters of office space. That's about a tenth of the total leasable office space in Metro Manila in 2019, pre-pandemic. But the pandemic happened, and then the POGOs left the Philippines. Also, because of the pandemic, we were introduced to new ways of working, hybrid work arrangements, work from home. And some companies rationalized their office space requirement, resulting in less office space occupied if they still occupy office space. So that really resulted in an increased elevated vacancy in Metro Manila. And as we mentioned, it will take a few more years before the vacated spaces are fully absorbed by the market. So right now, almost 20% vacancy in the capital region. In other key cities outside of Metro Manila, vacancies range from about 20 to a high of about 36%.
Oh, wow.
So these are cities including Clark and Pampanga. You have Cebu, of course, and then Iloilo, Bacolod. But interestingly, there's one city outside of Metro Manila that has a very low vacancy, and this is Davao. And we know for a fact that some BPO companies, were really scrambling to look for quality office space in Davao. And let's see if developers find the impetus to build more office towers in Davao soon.
So I'm just curious though. I mean, after what you said, does it mean, for example, let's start with the offices. Does it mean that we can expect lease rates to finally start going up, or there's still downward pressure on lease rates and occupancy rates if they have a building and they're not expanding? Are we sure that their occupancy rate will already start creeping up?
Okay. When you look at Metro Manila right now, April, as I mentioned, we still have about more than 2.7 million square meters of office space that's still vacant, and it will take a few more years. Depends on the annual take-up that you will factor into your projection. It could be It could be 6, 7, 8 years. But I think for the office leasing sector, we have seen the worst, because 2020, at the height of the pandemic, up to end of 2023, lease rates have corrected by a combined 40%. Makati CBD will revert to being a landlord's market, meaning, of course, it's the developers, landlords now that can impose the lease rate, right? And imagine Makati CBD, there's an office building there. There's a pocket of vacancy. The lease rate, 2,400 pesos per square meter.
But there are
so that's pretty high, right? But I think that is occupied already.
Oh.
So it's just a pocket of vacancy because this is a relatively new office tower. But overall in Makati, of course, there are buildings pre-pandemic, lease rate about 1,300 pesos per square meter. After the pandemic, 2024, you can get an office lease rate of about 800 from previous 1,300 down to 800. That is a pretty hefty
When you renew your
deduction,
contract.
right? Yes. So, or if this vacant is space and then you try to, entice other occupants, that's how you market. You really have to impose a much lower lease rate. And that's a pretty significant deduction compared to what we saw previously. So, in fact, believe it or not, in Makati CBD, there are some developers there, landlords, office buildings. If you want to lease out and if you want to review the lease contract, you cannot get a copy of the lease contract until you pay a non-refundable deposit.
Wow.
That's how difficult it was at the height of the POGO demand, 2017, 2018, 2019. But, things took a 180 degree at the height of the pandemic. And but right now, we're starting to see some recovery, especially for Makati CBD, Fort Bonifacio, Ortigas Center. So these are the three sublocations in Metro Manila where vacancy remains very competitive. Supply also competitive, meaning developers, they saw the effects of the pandemic, the POGO exodus. So right now, average new supply, this is our Q1 2025 data because we will be releasing our second quarter results soon, but that we're seeing right now. And I don't think that it makes sense for them to aggressively build when you have limited demand, because if you continue to build despite tempered take-up, well, it will result in the erosion of rental values and even prices if you're selling office space or strata titled office.
So at least for the offices, looks like
Yes,
we've
then
seen
that's
growth.
correct, April.
Vacancy rates probably are going to go down slowly.
Yes,
and then even the lease rates start to go up.
Yeah, so we're seeing that for certain locations, so Fort Bonifacio, Makati CBD. But I want to add also, April, what we're seeing in the Metro Manila office right now, pre-leasing is back.
Oh.
So imagine, even before a building is completed, a tenant is now willing to sign a lease agreement.
So we know naman how AI is the
Yes.
buzzword. So I'm just curious about your thoughts on
Yeah.
how it's affecting the BPOs. I mean, is it, and should we be worried?
Well, we've been going around outside of Metro Manila. Just last week, I went to Bacolod, and we talked to property players. We talked to IT stakeholders, Iloilo, Bacolod, those in Angeles City, for example, and even those in Metro Manila, especially. And while AI, artificial intelligence, challenges the low-value outsourcing services, what's important is that these companies located in the Philippines are upgrading, they're upskilling. What we have seen also and observed is that AI is double-edged sword, right? It has its positive benefits, it has its negative side, the deep fakes. We have seen some cyber security companies expanding in the Philippines, and they have been occupying office space also. So imagine that has been resulting in another segment of the outsourcing sector, resulting in additional office space take-up. So somehow, while there are some challenges in the low end segment of the BPO sector, you have these other subsegments of the outsourcing services, outsourcing industry that are still occupying office space. So, well, you lose some, you win some.
At least net still grow.
That's correct, correct. And hopefully, these companies proliferate in the Philippines because this AI software engineering that we know has 2 sites already in Metro Manila and will be expanding in Cebu. So again, that's one good example of the shift to suburbia, not just in Metro Manila, but even outside of Metro Manila, including
And what about for residential? Like, have
Okay.
we seen the worst?
Yeah. Well, for the residential, we believe so because especially after, again, the POGO impacts, right? You've probably seen how the POGO demand really inflated prices and rents in the Bay Area. And with the POGO exodus, we've seen substantial correction of capital values as well as lease rates, especially in the Bay Area. The question right now is, do you still see opportunities to build, launch your condominium projects, especially if you look at certain locations? In the secondary market, April, the Bay Area has been seeing some problems, challenges. The vacancy of the Bay Area is more than 50%.
Oh.
So essentially, 1 out of 2 condo units that are being sold, resold, or leased out is vacant at this point. But again, not all sublocations or submarkets are the same. Makati CBD, Fort Bonifacio, Ortigas Center continue to record sustained demand. In fact, these 3 sublocations, when you look at the unsold ready for occupancy units, they contribute less than 5%. But there are certain portions in Metro Manila where we still see a sizable number of unsold condominium units. So you have parts of Quezon City, parts of Manila, parts of the Bay Area, and then fringes of Makati. So this is what we're seeing in the Metro Manila residential sector right now. The upscale, luxury, ultra luxury still doing relatively well because this is a relatively smaller market. The problem lies in the mid-income segment.
Which is like what price point?
Yeah, so we start with the lower mid-income, 3.2 to 7 million. Upper mid-income, it's 7 to 12 million. And it's no longer surprising because remember, this is the segment most sensitive to interest rate spikes. The mortgage rate increases. And if you are a speculative investor, right, you buy a mid-income condo unit, and then once it's completed, well, you hope against hope that you'll be able to lease it out, and that should be able to cover your mortgage. The problem is, well, do we still have renters or do we still have POGO employees that can cover that financing requirement for your residential unit? So this is the most challenged sector right now in the Metro Manila condominium sector. At this point, in the property sector, especially for the residential segment, it's about launching the right product at the right price in an ideal location. I'll give you an example. While the 3.2 to 7 million peso segment in Metro Manila is struggling at this point and chipping in significantly to the unsold RFOs in Metro Manila, when you go outside and launch that same price point, some developers are in fact doing relatively well.
You said shift to suburbia.
That's correct. I know a developer that launched some of these upper mid, lower mid-income projects, for example, in the Bay Area. So say take that 3.2 to 4 million peso per unit as an example. That's struggling, right? But when they launched, for example, in Pampanga, one project, 1,741 units, 3.2 million, that's the average price, 10 towers sold out.
Wow.
So, meaning, while there's some issues, challenges in Metro Manila, when they go outside, they see opportunities, which has really been reflecting the shift to suburbia, the more pronounced development outside of Metro Manila.
Yeah. But I'm just wondering, given the size of the market in Manila versus outside, will it, is shifting out enough to offset what is lost in Manila?
Yeah, that's a very good question because so far not yet. Because in Metro Manila, when you talk about a single condominium tower, you can raise how much? 5 billion at the very least, 6-7 billion for one condominium tower. Imagine how many lot only or house and lot units do you need to sell in Bulacan, Pampanga, Tarlac, Cavite, Laguna, Batangas for you to be able to cover that 5 billion sales? And which end user market is this? The OFWs, the Filipinos working abroad. You have what? About $36 billion in cash remittances, right, in 2024. So imagine taking out 13% of that, which according to the central bank is the highest allocation of remittance receiving households on real estate purchases since 2016, being allocated on property development. That is huge. Some developers have invited me to do briefings outside of the Philippines, Abu Dhabi, Dubai, Hong Kong, Singapore. And what's interesting is that, I see the OFWs really investing. So some would probably ask me, how come I would say that, given that prices are increasing, inflation still reflected in our daily basic goods, how come developers still invest? Well, I see those investors. I see the OFWs, the
demand,
faces exactly behind them, and acquiring all those residential units where there is a strong demand, especially for the student-centric condominiums, those located near university areas, or the beach-centric, leisure-oriented, those near golf communities. So these are the major demand drivers right now that we're seeing in the residential market. And again, support that shift to suburbia. It has become a buzz phrase for us, but it's really happening right now outside of Metro Manila and in the countryside.
And your view on falling interest rates, would that be good for the residential sector?
Oh, definitely. Because, of course, lower interest rates would result in lower mortgage rates. The problem, April, is that, and you're probably seeing this also, while we're seeing reductions from the central bank, the banks, the lenders have yet to follow suit.
They have yet to cut.
Exactly. So based on our data, based on Colliers Philippines data, from 7.8%, even after all these aggressive reduction from the central bank, the average mortgage rate is still at about 7.7.
Yes.
That's still elevated, right? And has really been stifling the demand for condominium units. Again, especially that mid-income segment, 3.2 to 7 and 7 to 12 million pesos.
Which are most likely the buyers who borrow money.
Exactly. Unlike, when we talk about the luxury, ultra-luxury investors, they're awash with cash, or they'll probably sell their house and lot in an executive village and then buy a vertical condominium unit. Still, they have the source for that vertical purchase, unlike a middle class family that still relying on mortgage rates for that the next residential investment.
Yeah. So now let's shift gears. I'd like to ask you about the mall segment.
Okay.
Is that still growing? Are you excited about that?
Oh, definitely. We're very much excited. As you know, the Philippines is a mall culture. We go to
Still, even with online
exactly.
shopping.
That's correct. And what we've seen, April, is that developers have been complementing their brick strategy with click strategy. So it's a brick and click strategy. So you have your online presence, but you're complementing it with your physical mall space presence. I think what's important for the Philippines, April, especially in Metro Manila, is that the mall vacancy has been improving, especially for the Metro Manila retail sector. Vacancy is about 13%, and we're likely to see this reverting to pre-pandemic vacancy by 2026, end of 2026. So we're likely to break the 10% vacancy barrier by 2026. So that's a very good insight. In fact, this projection is much earlier than what we initially thought. We thought that mall vacancy in Metro Manila will only revert to pre-pandemic vacancy in 2027. But based on our projections and given all those demand drivers and tempered, maintained, managed supply from mall developers, we're likely to see the mall vacancy to revert to pre-pandemic levels sub 10% by 2026.
So what other segments in the property space are you excited about?
Definitely hotel, leisure. Of course, we know that the Philippine government failed to reach its target of
targets,
7.7 million last year, or sub 6
Even this year, it's actually
million.
down.
Yes, it's actually down for the first 4 months rather, if I'm not mistaken. The challenge is you no longer have the Chinese travelers, right?
Yes.
Also Korean. Remember, South Koreans, our top market. You have Korean won depreciating, and then some political upheavals, economic crisis also in South Korea, resulting in less outbound travelers from South Korea. Japanese, of course, we still have the tourists, but the Department of Tourism is trying to fill this void by attracting other markets, and this include Indian tourists, and I believe that the Department of Tourism has supported the issuance of visas for the nomads, right? So they go to the Philippines, they work here. So I think that's a very interesting development for our hotel sector. Hopefully, we attract more digital nomads. I know that some developers are also taking advantage of this because they're positioning their condo hotels outside of Metro Manila as facilities, accommodation hubs for these digital nomads. So, a very interesting development for the hotel sector, especially April, of course, the infrastructure development, the Bulacan Airport. Imagine its capacity once fully operational, 100 million. Even bigger than Changi's 90 million capacity, right? And then you have Clark Airport, modernized, Cebu. So we believe that the infrastructure implementation will result in more foreign arrivals, even domestic tourists that will go around the Philippines.
What advice would you give to investors looking to enter or expand in the Philippine property market given the current climate?
I think right now, April, what's important is you look at the thriving locations outside of Metro Manila. Again, we can't deny the fact that the Metro Manila residential market has been seeing some challenges. But if you are to invest right now, especially if you're a first-time investor, where will you invest? And where will you be able to achieve price, capital, value appreciation? So you look at these emerging destinations. Of course, outside of Metro Manila, we already have Cebu. Cebu is the biggest and offers the largest office supply and condominium stock outside of Metro Manila. But outside of Cebu, do we still have opportunity? So it's important to look at these thriving, bustling destination. I mentioned previously that Central Luzon, Central Visayas are at the center of thriving property developments and initiatives from property firms here. So zeroing in on Central Luzon, of course, Pampanga. I'm a little biased here because I'm from Pampanga, but I'm really seeing all those developments. I remember graduating in 2006. That was the development of SM in Clark. But look at SM Complex in Clark right now. You have a Park Inn hotel, you have an SMX, you have a national university, you have office buildings. Within Clark Freeport, you have the Han Group, you have the Philinvest Group. When you go to areas like San Fernando, so you have Capital Town by Mega World Projects, by Vista Land. Also, when you go to Angeles, you have Rockwell, and Rockwell's condominium projects are doing very well. The first tower, Manansala, is sold out already. So, Pampanga, outside of Pampanga, but still Central Luzon, Bulacan.
Then,
You have the Northwind Global City by Mega World. The new international airport in Bulacan will be completed 2028, 2029. Of course, Tarlac. You have the likes of New Clark City. One of the major developers, of course, is Ayala, also in Tarlac. So these are the developers that are really taking advantage of the growing opportunities in Central Luzon. You go to Central Visayas, where you have Cebu. And Cebu, of course, you have the likes of Rockwell here, Cebu Landmasters, of course, very aggressive. terms of their development. Among the major players, but homegrown, local ones, Apple One Properties, also Federal Land, also. And then when you go to Bohol, I think this is an emerging destination because of its leisure angle. The leisure play in Bohol continues to grow. We believe that there are a lot of MICE projects, hotel developments that have been lined up. JW Marriott will have a condo hotel in Bohol. But when you go outside of Central Luzon, Central Visayas, of course, Western Visayas, Bacolod, Iloilo, Davao, of course, very interesting also. And then, let's not forget, when you go to Northern Mindanao, you have Cagayan de Oro, which, based on our data, has also been seeing a lot of office leasing activities and the new foreign hotel brands that will be opening soon, including those at Princess, which we see now spilling over even up to Bukidnon, because it will also have a new hotel brand, and that's those at Princess. So all these developments are very exciting and should really excite property developers for the recovery prospects of the property segment, as well as the thriving, the more affluent and the experienced, as well as the new property investors.
Okay, so with that, thank you very
Thank you,
much.
Ethel.
So translating it maybe to property stocks,
Yeah.
I think the key message is focus more maybe on offices,
That's right.
office developers, and those that are focused outside of Metro Manila. For residential, well, maybe we've seen the worst, but that said, it's probably going to take a while for prices to go up and the volumes to go back to pre-pandemic level. Okay, so with that, thank you very much. That's it for this episode of this Market Talk series of Intelligent Investing. If you found this discussion useful, don't forget to like and subscribe for more market insights. And remember, stay sharp, stay selective, and as always, invest intelligently.